Well, the Abbey has raised some of its fixed-rate mortgages by nearly 0.5%. That's just a week after announcing some rate cuts in an attempt to win new customers. Well, the move has been criticised by some industry watchers who say it's adding confusion to an already volatile market. Well, Robin Amlôt is senior editor at comparison site moneyextra.com. Very obvious question, Robin, here. What on earth is going on, please?
Well, it's quite simple, of course. The mortgage market is in an incredible state of flux, has been for the last several months. We've gone from 15,000 mortgage products available about a year ago to under 4,000 now. Abbey, not the only ones, I have to tell you, that have been raising their interest rates. Also today, Woolwich have put up fixed rate costs. Northern Bank in Northern Ireland have put up their fixed rate costs. Amongst the Tiddlers, Mansfield Building Society has withdrawn all its fixed rate products. Marsden has said that it's still got fixed rate products, but you need a 25% loan to value deposit. Now, what that means, of course, is if you look at Nationwide's figures out today, you'd need a £43,000 deposit to get one of these decent fixed rate prices. The problem is interest rates in the money markets have been going up.
This is also to do with so-called interest rate swaps, and they're indirectly linked with that interbank lending rate?
The problem is that people are now expecting inflation in this country. Inflation expectations are at an 8-year high. What that's done is it's driven up the LIBOR rate, the interbank rate. We have a base rate at 5%, but the interbank rate currently at 5.86% today. That, in fact, is almost 0.1% higher than it was 3 weeks ago. Now, that might not sound like much, but when, of course, you're trying to arrange deals in the money market that run to hundreds of millions of pounds, that can make a heck of a difference to the amount you can actually borrow as a lending institution and then offer on to mortgage borrowers.
Now, hindsight is the greatest sight of all, of course, and far be it from me to say that the banks are not capable of predicting things like the credit crunch, but I mean, with this change only a couple of weeks ago, could they not have foreseen that we're in such a volatile market?
I think the problem with it being a volatile market is that you have to accept the fact that these mortgage offers, and we're talking about not the plain vanilla standard variable rate offers that banks and building societies give, but the special deals, the fixed rates, the discount rates, they arrange those by organising a chunk of money in the money markets, and once that money's gone, then they have to go out and get another chunk. So mortgage offers do turn over. What's happened recently, though, is the length of time those offers are available for has come shooting down. It's gone from about 30 days to just 11 days, which actually, of course, is going to make it very difficult for anybody who's looking for a mortgage or anybody who's looking to remortgage actually to get the deal they want.
OK, we've had the hindsight. Now I want you to get your crystal ball out and talk about foresight, because I want you to predict what is going to be happening in the coming months. I mean, I've heard predictions today, certainly in the media, that the credit crunch hasn't really dug in yet. It's going to be 2 years minimum.
What we're already seeing, as I said, with inflation expectations is the fact that the Bank of England won't probably be cutting interest rates in the way that some people were expecting them to later this year. It looks as though the base rate is on hold. Now, at the same time, we have the LIBOR rate edging back up again because of worries about inflation and worries about the continuing impact of the credit crunch. That means mortgage offers are still going to be short-term. They're also still going to be more expensive than they were only a couple of weeks ago. People are going to find it very difficult to get a competitive rate.
OK, Robin Amlôt, the secret obviously there is pounce when you see the offer. Thanks very much for joining us